Hi everybody, welcome back. Okay, that's all done. Just close chat box there. Sorry, I always have it closed when I'm in full rabbit mode. I've just switched over onto the multiple Renkos. I've got, and these are the equivalent. So below here, you've got the equivalent time. So you've got a 15-second chart here, you've got a 30-second chart here, and you've got a 1-minute chart here strung along the bottom. And these are the equivalent Renko brick sizes according to those time frames. And the 1.7 here at the top is just telling you that this is the brick sizes which are delivered by the indicator are $1 $1.70 in terms of the gold price per ounce. So we've got a 1.7 in terms of ounce here in terms of each of these brick sizes. And if I just check the, sorry, let me just drop that out of the way again. We just go in here and just refresh this. This is the 1 minute, so we go to the 1 minute, just see if that's changed at all. I was literally just changing it over. So it's just dropped fractionally. So we're on 1.6. But the reason I wanted to highlight it was really just to show you on a completely different non-time-based chart how effective they are in using them in a blend with a time-based chart where you're using volume price analysis, but then above that you're using a non-time based chart which reveals momentum. What the Renko also does is it gives you this very smooth, regulated price action. It removes a lot of the noise. The indicators work in the same way. I've got the trend monitor below, which as you can see in each of these little pullbacks hasn't actually changed at all. It has on the faster time frames, but not on this slower time frame, which is on a minute. You've got the trend dots here, which work beautifully, but they work very close to the price action. So when you get down to these regions of pauses, congestions, minor reversals, they start to move underneath. They're well underneath here. You also get a change in color here. This one, as you can see, has gone to blue. This one has reverted back to gray, which is the interim color position, which is congestion color, if you will. And then we come out the other side into red. Again, you can see it's gone slightly underneath here, but it's gone back on the top again. Now we're starting to see this happen down here. The trend dots have gone underneath. But the point is that is very close to the price action. That's what you expect to see. It's giving you an almost instant view, if you will, of the trend as it oscillates, as it develops strongly, or as it moves into congestion. But what the trend monitor does is takes a much more considered view. So the two of them in tandem, one of them is giving you a very a snapshot, fast view, if you like, of the trend. The trend monitor is stepping back from it. It's like I suppose, a zoom on a camera, if you like. It's taking a more considered view of the overall picture, rather than as the trend dot is doing, is you're focusing into a very close image. The trend monitor is actually stepping back from that and taking a more considered view. It's looking at the big picture, if you will, of that trend, and basically saying to you, well, actually, I'm not sure. I don't think this is changing at the moment. It may do in the future, in which case we'll move into transition. Now, what you're seeing over here, this is the 30-second. You're just starting to see that flicker of a change coming in here. The trend dots have already changed. It's what you expect to see anyway. But the trend monitor is now starting to indicate that potentially we are now seeing a flattening of that trend, a weakening of the bearish trend, and the possibility of a reversal into a bullish trend. You're already seeing that over here on the, this is on the 15-second. So you've gone through from bearish, trend dots red, reverted to the underside, changed color. We've gone into one transitional color into darker blue. We've come out the other side into bright blue. And as you can see, we've also got the accumulation distribution indicator on here with the various levels of support and resistance. And then below that, of course, you've got the opportunity to run a VPA analysis alongside that with the indicators again. So you've got the 15-second time-based chart, the 30-second and the 1 minute down here with all your VPA analysis. But you've got the beauty of trading a non-time-based chart, which reveals momentum, because what you see on a time-based chart is purely the opening and closing of the candle according to the time frame you set on that chart. On a Renko chart, that is completely independent of time. Yes, we've set it to a particular time frame, but in terms of how quickly or slowly those Renko bricks are built, they are built according to the optimal setting that's been described for them by the indicator. So where we've got 70 cents up here, once the 70 cents change in price has gone through, the brick will close. Now that could happen very quickly, or it could happen very slowly. That is dependent on the speed of the market. The market will speed up and slow down the whole time, which is why you see momentum revealed in non-time-based charts like tick charts and Renko charts, and you don't see it in a time-based chart. Just have a quick look and see what's going on in terms of the indices. They're in pretty much sideways. This is on the three of them. We've got the YM, the NQ, and the ES top line on 5, and down at the bottom we've got the daily equivalent charts for them. A little bit of divergence earlier on. The NQ was up quite strongly. You probably can't see it here, but it was up here somewhere, whilst the Dow and the ES were kind of lagging behind and actually turned red at one point. So we had up on NQ and down on the other two. It's something you see a lot of. We're trading around the volume point of control on the 5-minute time frame. That's the reason we're seeing congestion. We're also seeing congestion because if I pull over the VIX here, this is what the VIX is doing right now. This is on 1 minute, this is on 5 minute, this is on 10 minute, and this is on the daily. So it's no great surprise to see, the indices pretty congested. A lot of whipsaw, a lot of volatility. We're into earnings season. With all that entails, you've got the big ones, reporting later. It's inevitable that's going to be reflected in terms of market behavior. Plus, you've got all the others, as Anna calls it, the shopping list of triggers for volatility and so on and so forth, but risk events. But what you're seeing down here on the daily is really this maintenance of this very high position of the VIX up in the 26. This is the daily range down there. This is Trading Views, fantastic platform. And we will be porting all the other indicators across as soon as we've finished on TradeStation. So if you have any of them, or if you're waiting for any of the Forex specific ones, the currency matrix, the currency heat map, currency rate, they will be available on this particular platform, which is terrific. It also gives pre-market data as well on here. So it's a fantastic platform. I'm just delighted to have the indicators here. But you can see the daily range, 25.2, 26.2. So, it's been trading in a fairly big range, but it's also very high. Given the extent of the bullish run for equities, certainly over the last 2-3 weeks, whatever it may be, you would expect the VIX to be much, much lower than this. It's being held up by the options market and those who are buying volatility on the expectation of something dramatic in terms of the US presidential election. So let's just move that out of the way. That's where we are in terms of price action, pretty much sideways across the piece. Let's have a quick shoot round. Let's go back onto the gold time-based charts. Where are we? There we are, gold futures. There we are. Let's see what's going on there. Still very much bearish. We've had a bit of a rally, but it hasn't really developed into anything very much. You can see it probably most clearly down here on the 5-minute. Just pop that one up. Again, what have we got? Market trend. We get a little bit of buying coming in here. So at that point, with this amount of volume and a hammer effect like that, yeah, we're expecting to see some buying coming into the market and a reversal, which we do, but it doesn't look terribly strong. Seems to have hit some resistance up here, starting to roll over again. Trend monitor hasn't really changed at all, so it's just yet another minor reversal in that bearish sentiment. We managed to claw on the 3-minute. We managed to claw our way back up into the VPOT, which is deep on this chart at 1896 an ounce, but really no flicker of a change there. Again, you can see the volume, the buying volume is pretty low, pretty thin, pretty weedy. For anything substantial to occur in terms of an upside move, there's got to be some pretty dramatic volume to come in and buy the market, because if it's not there, it's just going to continue under the weight of selling. So for this to reverse, we'd have to see some really deep buying coming into the market, which we're not seeing at the moment in terms of the volume. Just go and see what's happening on oil, which I think is going in the opposite direction than was the last time I looked. Yeah. Daily chart's probably the most interesting. We've written about it. I think we read about it yesterday or the day before. Oil is really not going anywhere. It's being driven primarily by the supply-demand equation, which is very weak right now. So in terms of the technical picture, we've got the volume point of control here just above $40 a barrel. And that's where this is going to languish for some particular time, unless, of course, there is a fundamental, excuse the pun, change from OPEC in terms of managing supply to drive prices higher. If there is nothing, and they've tried in the past, and it really hasn't had much effect, because the overriding weight of this market now is on whether global economies are going to struggle, and if so, for how long, and therefore how much is there going to be demand for oil in the near future. And I think, was it this morning, there was a report that said it's not going to come back till 23, 24, some considerable time. 2023. So in terms of trading intraday, it's exactly the same picture as always. You trade what you see on the chart. Got a volatility trigger coming on 15-second. We've got another volatility trigger here, so we're expecting congestion. We've got a little bit of buying coming in here on 1 minute. Just pop that up, see how big that is in comparison to everything else. That's okay. A little bit of buying coming in under there, but we're trading around this region here on the volume point of control. So, you know, there really isn't much prospect of anything other than congestion. If it breaks the downside, which is what the trend monitor is telling you, there is a decent move there. Bear in mind, we've got a very strong platform of support in place here on the blue dash line. If we get a break and hold below that, then probably happy days, because the volume's falling away exponentially and the market should move through there fairly swiftly. Just keep an eye on, see if that is if that does actually close below there. It's just gone below it now. It's actually it's at just below 40, so it's trading around that region, may sit on that line, but that's certainly acting as a potential support area. And that's part of the rationale of me using multiple timeframes, because every chart will tell you something different. It'll tell you target areas for potential trades, whether your trade's going to run into difficulty. Have I got price-based support coming into effect? Have I got a ceiling of resistance coming into play? Am I trading at the volume point of control in a slower time frame, etc., etc.? Not least of all, what the indicators will tell you about, you know, the changes in trend and how that particular trend is developing across the time horizons. You can see the V pockets on pretty much every chart, just starting to break away now. Maybe we'll get a break lower. Go back to the 15-second, moving down into this low volume region here. Volume and pricing agreement on that particular candle, so that all looks okay, no problem there. Let's go back up onto the 1 minute, just get a different perspective. So we've now gone below that that area of what was acting as price support and is now acting as resistance, obviously, in any reversal, moving down into this volume, which is pretty thin. So from a trading perspective, you know, we'd expect this market to move through fairly rapidly through there, because there's nothing in the way of either price or volume. Certainly on the 1 minute chart. Let's go and have a look at the 5 minutes, see what we've got there ahead of us. Let's have a look here. Okay, this is looking pretty nice too. We've got this very strong, you can see how strong that level is, came in and capped off that rally how many times? 2, 3, 4, 5 times, immensely strong area at 40.25. Got down to this region. Now what we're looking for, if you're looking for this to a short, you'd certainly be eyeing up this region, because if it gets through there, the travel from 90 down to 65 and below, these potential support areas of price are very thin. They're not well developed. They've only been created. You might not be able to see the numbers here, but what you get with the accumulation distribution indicator is a little numerical value, which tells you not only through the visual width of the line, but also numerically how many times it's been tested, and that's been tested a couple of times. So you can see it's a little bit stronger than this level. That level is very minor. It's only been tested once. The one below it's been tested a couple of times as well. But those three together are a decent little cluster. So in terms of trading opportunity, if it broke below 90, you'd expect it to at least travel through here pretty swiftly, down to 70, maybe down to 65, before you started to run into any kind of headwind in terms of that particular trading opportunity. But you just got to be patient. You've got to wait. You look at your levels. What am I looking at? Okay, well, this is really the level that's important to me now. So a close below 39.90, maybe 38.85, you could nip in and take maybe, you know, 20 bucks out of here, 20 cents on the barrel out of here, before you expect a little bit of congestion to form around here. But it would all depend on how much volume was driving that market lower. Go up onto 10, whether that's telling us any different, not really. Obviously looking at a much longer term perspective, but what's interesting about the 10-minute chart is that will then give you further levels to consider in terms of taking a trade to the short side, because this one here is extremely strong in terms of potential price support, as is this one. If you got down to 50, very strong indeed. You can see the thickness of the line. In addition to that, the volume here on the volume point of control is also building. This is the volume histogram, a lot less than up here, obviously, but nevertheless, should move through here pretty swiftly, but then it's going to hit trouble here, and then you're into this great wedge of volume here as well, where it's almost certainly will struggle a little bit. It's not going to go through there fast unless there's some dramatic news to drive it. Generally speaking, just on a typical day, you would expect that to at least struggle a little bit going through this region, and certainly with these two levels here. So from a trading perspective, if I break below 39.90, is that enough for me? Am I concerned about this level? The answer is certainly yes, I should be, because it's going to hinder progress, and therefore that run lower is probably not going to be very straightforward. Just very quickly go back onto the gold chart. Let's see what's going on. See if we've had that any more reversals coming up. No, still looks pretty weak. Obviously, after such a big move, you do expect some reversals. You expect buyers to come in because the gold price has fallen so far, or whatever it is has fallen that far. It's an opportunity to buy. There'll always be people like that around. They won't necessarily be looking at it from a perspective of volume price analysis. They'll be looking at the perspective, well, the price has fallen a long way, so it's bound to go back up again. It's that sort of, or maybe it's hit a Fibonacci number or something like that, and they'll be looking at it, buying on that perspective.
So, darling, on the trading view,
it'll
still be support and resistance, not accumulation and distribution.
Yes, it will be, absolutely. Sorry, I think there's a question in the chat. When we develop the indicators for trading view, they will very much mirror those on MT4, MT5. The price will be identical, so it'll be 894 for the full package. There will be all the indicators there, but they will very much mirror what is on MT4-5. So support and resistance, yes, will be pretty much the same. It'll be dash lines for minor levels, solid lines for stronger levels, but those stronger levels, again, in the same way where you have clusters of them, you'd be using exactly the same way. So no, it won't be the same as on NinjaTrader, but it will very much reflect that similarity in terms of MT4, MT5. And they will be available in the next, let's say by the end of this calendar year. So I'm hoping they will be done by then, because we want to roll out TradeStation this month, and then we've got a couple of months of clear work to finish those off and get them done. So I don't think it will be very much later than that. And at that point, the price, if you have the full package already at 600 and whatever it is, you will actually get all those indicators free of charge. So if you've bought the full package, or you're thinking of investing in the full package as is at the moment, you will actually get all the other indicators for free in effect, because at that point, once they're released, the price will go up. But if you've bought the full package, you will get them added to your account free of charge, which will save you $200, nearly $300, I think. Because it's just our way of saying thank you. We will also be tidying up some of the other indicators like the Camarilla levels, which will be a lot cleaner, because we've now got this opportunity to use line drawing and object drawing, which we didn't have before. I'm just watching the price action. I love the 15-second chart because it's a very quick way of learning VPA. We've got volatility trigger, intercongestion, got some buying coming in there, a ton of volume under there. So you're expecting a little bit of buying coming into the market. Seeing it on 15-second. Obviously, the volume on a slower time frame is always going to outweigh what you see on a faster time frame. But what the faster time frame does is it gives you a heads up as to potential changes. And that's why I like it so much, because you'll see these changes coming in and then it goes back out again. It's like trend monitor. Yeah, it flipped, it came in dark red, dark blue, dark red again, out the other side into bright red. It gives you a lot of confidence to hold the trade when you're in these slower time frames of a minute, 2 minutes, 3 minutes, so on and so forth. So it looks as though we're coming out the other side. We've got a continuation. This is nice, bright red, bright red, bright red, red throughout the piece, and picking up the pace again, and on down we go. Is there anything you wanted to add to that, darling? Sorry.
Yeah, a couple of things I've got here.
Okay.
Quite interesting.
Just going to pass over to Anna for a change of voice.
And then can I pass over to you?
Yeah, you can. Hold on.
We're back here on the equivalent of the US 30, the Dow Jones, basically, whether it's the YM or the Dow. And what I said just before we passed over to David is one of the things, as traders, we all like to develop certain trading techniques, strategies, tactics, call them what you like. And we obviously look at a chart and we try and spot where we can deploy those said tactics, strategies and techniques. But really, I think you should look at it from another perspective. You should really let the chart talk to you, because you know that once you understand price action, yeah, you may like reversal trading, you may like breakaway trading, but if the chart isn't set up for that, it ain't going to work. And I do take issue when I get, you read on sites and what have you, the strategy that you can use in any market, in any condition. Well, that's absolute rubbish, because the chart is doing what the chart is doing. It is reflecting market sentiment. It is reflecting what your fellow traders are maybe doing or not doing. So it is far better to understand to begin with the perspective of the chart and understand what is the narrative, what is the chart telling you. And once you understand that, you can then take one of two decisions. You can either say, well, actually, my strategies, my tactics are these, so therefore I will wait for the chart of my preferred instrument to come into that state and condition, and then I will look for a trade. Or you can say, yeah, I recognize that that's this is setting up for a nice breakaway trade. Yeah, I can see that there's a reversal trade coming up. So it's how you play it, and there's no right or a wrong answer. Personally, I prefer the multi, the multi, what am I trying to think? What word am I thinking of, David? Multifaceted approach. That's the best way I can describe it. But to get back to what we were seeing here, we are still in this congestion phase on the 3 minute. We are still at basically in whipsaw price action. Levels are sort of being respected. They're bouncing off. This is clearly the level that it doesn't want to go through on the 3 minute chart. I look at the hour. It's also kind of around what's called the R1. If it certainly goes through there, this is what we call a sort of buffer zone. So it may fall through there and it may simply go into more congestion. But as I said, it depends on the range of the candles. So if you are on a second chart or tick chart, or on very fast time frames, there may be something sufficient for you to take. But it looks as though we're going to end up with another Doji candle. Now, Dojis are quite a very interesting candle. Some traders say, oh, well, they signal a potential reversal, but actually they're just indecision. They are, if you can imagine a kind of tug of war, and there's no side has actually come out the winner, if you like, and eventually there will be a winner. We can see there's one kind of being formed now. We've got another 4 minutes to go to the top of the hour. There was a previous one there. Very difficult, very tricky trading conditions, lots of whipsaw, lots of chop on the faster time frames. Now, the other thing about congestion phases is this, and this is where Wyckoff's second law comes into effect. Basically, the longer a market stays in this congestion phase. Now, this is a congestion phase with volatility, and also quite a wide-ranging one. And we know it's volatile because we've got very deep wicks to the candles. But the longer it stays in a congestion, whether it's a non-volatile congestion or a volatile congestion, when the breakout comes, it is going to be very strong, because it's kind of built up sort of energy within it. It's, as I said, this is the law of cause and effect. The longer the cause, which is the congestion, then the greater the effect when that does finally break out. And we have the levels very clearly marked for us up here. We've got 28,806, and we've got, what have we got down here? We've got 28,700. So as I said, big, big range, reasonable range, but that doesn't necessarily mean it is going to be easy to take pips on the faster timeframes. And what's interesting here, as we said, this is the first time, it's unusually we've actually gone from a bright color to a bright color. Usually it goes into these transition colors, as it were, but we just, as I said, as far as I'm concerned, it's on the time frames that I'm looking at, I would still be waiting for some clear direction. So that's what I say. I'm just going to well, that's what, have you answered it? Oh, fine. Okay, well, David has already answered that question. Let me just pass back to David.
Hi everyone, back with me again. Just as we wrap up, just move that out of the way. There we go. That's where we're on the VIX. That's why we're seeing what we're seeing at the moment. This constant whipsawing. You can see it here on the 10-minute, on the 5-minute. We really haven't moved outside this range. We're up and down in this region, and it's really not going anywhere fast at the moment. Certainly in terms of the indices, fantastic trade on gold. You've got to go and hunt these out. It also highlights the issue that you've got to decide what it is you're going to do. If you're setting your stall out as an index trader, then on days like this, certainly at the moment at any rate, from a slightly slower term perspective at any rate, there's not a lot going on. So what do? Do you then go off and look at other markets? If that's the case, then you've got to accept that fact. Or if you have enough discipline to say, I'm only going to trade indices, or I'm even only going to trade the NQ or the ES, that is my preferred index. That's the one I'm going to get to know. That's the one I'm going to trade universally. I'm not trading anything else. I'm not interested in hards. I'm not interested in metals. I'm not interested in softs, whatever it may be, and so on and so forth. Or you trade all markets. Or a limited number of markets. But you have to decide that for yourself and find out what works for you. There's advantages and disadvantages in every single approach, as always. Just to wrap up before we run, this is where you find all the indicators at quantumtrading.com up here. MT4, 5, NinjaTrader 7.8 and TradingView. And TradeStation, as I say, will be launched this month on both TradeStation Global, which is TradeStation platform driven by interactive brokers. So if you have an IB account, you can hook it straight through and you can trade every market through that particular relationship. Or you can have the version 10 and above, which is TradeStation Securities. Both have radar screen, which is just awesome. Fantastic trading platform. Absolutely love it. Can't wait to launch that. We'll have a separate webinar series in terms of that one for TradeStation. Anna, you can find all the analysis over on annacooling.com. All the books are there in both Kindle and in paperback version. You can find them on Amazon, and all the analysis down here. I've done some things this morning. Where I've been there. And finally on the Forex program, here we are, Quantum Trading Education. It's called the Complete Forex Trading Program because that's what it is. It covers everything you need to know to trade Forex markets with confidence. We have these 5 core modules: psychology, fundamental, relational, technical, deep dive into VPA, the mechanics of trading, how to trade, how to manage your account, and everything else. And then below we have all these other VPA chart examples, how to use the indicators, pulling all together, topic webinars, webinar library, and resources. There's 440 odd lessons in there, I think. And in terms of video hours, it's something like 200 to 250 videos. It's huge, but that's what you need to know to trade it with confidence. It took us almost 2 years to put the program together. We put a huge amount of thought into it to cover every single aspect, to really give you an insight into this market, to make it as straightforward to trade as possible so you understand it as well as we do. So that's it. We're going to run along now. I hope you've enjoyed today. Thank you very much indeed for coming along today. We will be back with you next week on Tuesday, as always, the Forex session at 7:45 UK time, and then the US session later in the afternoon. And as I say, the TradeStation webinar will be bolted in at some point alongside that. And if you're on the mailing list or on the email list at Anna's site, annacooling.com, you will receive details of that automatically. So if you're not on that list, please hop over there and register, and then you'll get the details coming up there. VIX is still moving sideways. There we go. Enjoy the rest of the trading day and enjoy the rest of the trading week. We are expecting some big moves, certainly possibly tomorrow, certainly into Friday. There is going to be some And
21st of October.
And towards the 21st of October. So we're looking for some big moves in equities to the downside, I have to say, probably not to the upside, certainly the downside. A pretty big correction on the horizon. So thanks for coming along today. Hope you've enjoyed it. We will see you again soon, and bye for now.